comes to buying a home, there are things that you need to think about. One being the finances. Most new homeowners use one of four different types of loans to purchase a new home. So we will be discussing the pros and cons of different loan types. I'm Margaret Herdt. I post new videos every Tuesday all about Loveland and the surrounding area, so be sure to subscribe so you don't miss out. I'm with my really good friend today, Peggy Kramer. Peggy is a loan officer with Elevations Credit Union, and she has been in the business for 15 years.
Yeah, about 15 years now.
15 years. So Peggy's going to be sharing with us today all about those four different types of loans. So Peggy, take it away. What are the pros and cons? Let's talk about conventional loans.
Conventional loans are usually, probably 95% of my loans are conventional. We're looking at 3% down for the first-time home buyer, and then a lot of people will ask me what constitutes a first-time home buyer.
What is a first-time home buyer?
Right? So if you've never owned a home before, of course you would be a first-time home buyer. If you haven't owned a home in the last 3 years, you're also considered a first-time home buyer and would qualify for those programs.
But you have to be 3 years without
3 years.
owning a home.
Correct.
Okay.
If you have owned a home before or currently do, and you're gonna, let's say, keep your current house and turn it into an investment property, we can look at a 5% down on your new purchase, as little as 5.
That's pretty good.
It is good, yeah. And that's probably the easiest loan. If you have like other deciding factors, which would work in through Freddie and Fannie, which is the conventional loan product. We can look at if your income qualifies, we can look at Home Ready or Home Possible. What that does is help to lower your mortgage insurance that you would pay. If you don't have 20% down, as we all know, you have to pay mortgage insurance every month.
So let me ask you this, with a conventional loan, can you get rid of that PMI or mortgage insurance at a certain time?
Good question. Yes, you can. It normally takes 2 years. And then you can request it through your servicer to see if it qualifies. And you'll always want to make sure you go through your servicer, because they'll take a look at it, they'll send you a letter, and they will order a new appraisal for your property. Otherwise, it'll drop off once it's reached 78% of your appraised value when you purchase the home.
But you will have to have an appraisal done in order
Not
to determine that?
No, not if it gets to 78%. So if you maybe get a windfall the following year after you purchase your property, you could do a principal reduction and be able to get it to your 78%.
Okay, yeah, all right, perfect.
You keep the same rate, same terms of the loan. So,
what if my loan is sold?
your terms don't change. Your
Okay.
rates and terms do not change on that loan. So if you go with somebody that's a broker and they broker the loan out and sell it, then yes,
Okay, perfect.
loans and terms cannot change. But then you got to get a hold of your servicer. That's why it's good to go local.
That is true. And it's easier for realtors as well if you're dealing with somebody local like Peggy, because if there's a problem, we can call up and I know I can always get a hold of her. So
Right.
that's really important. All right, so the next type of loan.
So VA, obviously you have to be a veteran to be able to qualify for that loan, but it's a great way for us to give back to our servicemen and women that have served us. Certificate of eligibility is what they'll be looking for, and I will order that on my system.
So what's the pros and cons to that?
Well, the pros is that you don't need, you could do 100% financing for one thing. So that's a good thing, and it's a great way for the veteran to be able to get into a home without having to come up with money. But with all loans, you do have closing costs, and you have earnest money, and you have, as you well know, escrows that we have to do. So you have to keep that in mind. No matter if you're doing a 3% or a 5% down or doing a VA loan, you still have to have a little bit of cash on hand to be able to get to the closing table.
It's not free, huh?
Nothing's for free, as we know.
Okay, so what I'm seeing is there's not a lot of people using VA loans at this time. Is that what you're seeing?
That is what I'm seeing. I don't want anybody to shy away from them because obviously with a really good realtor that can present the offer, you should be able to get them under contract still. But people shy away from them because they think there's extra steps, and there is not.
Well, and the seller sometimes thinks that there's a lot of expense that they're going to have to incur because, of a VA loan.
Yes. The VA loans are built for the veteran to make sure that they are protected. So, there's a different inspector and appraiser that goes into the property for the veteran. So,
our next type of loan.
FHA.
So FHA is a government subsidized loan. Isn't that correct?
Yep, and so they would be the backer and guarantor on the loan for the borrower. So.
And what's the pros and cons of an FHA loan?
So FHA is good if we need to get you into a property. Maybe you've got things in your past that are bankruptcies, foreclosures, maybe some credit issues, or our debt to income ratios are a little tight. We can look at FHA. FHA is always just my fallback though. It's not my go-to on the first because FHA needs 3.5% down. There are funding fees, so it could be a little bit more expensive.
I was just going to say, so the fees to the borrower are
more expensive,
and
you can't get rid of PMI in 2 years.
Can you get rid of it at any time?
75% once you've gotten down to 25% of the loan. So normally, if I need to get somebody into that house, and this is the only way we can go, we'll get them into the house, and then we'll look at it in a year or two and refinance them out of that, so they can get rid of that mortgage insurance.
How much is PMI going to increase a person's loan? I know it depends on the amount borrowed, but just give me an average.
Well, the scary thing is that this is one thing that I'm adamant about is credit score. So credit score drives PMI more so than what you put down. So your loan to value is pretty minimal when it comes to PMI. It's that credit score. So let's say you come to me and you've got like a 660 credit score, and I see an opportunity for us to fix that credit. I'm going to go after that first before I say, let's go and find you a house, because I want to make sure that you're not paying this outrageous
Out
amount.
the nose.
I have seen it all the way over $400 on some loans for PMI because they've got a 620 or a 640 credit score.
That could take care of all of your utilities for the month.
Right. So we want to make sure that we do some credit, help you with the credit, and just rescore that. And we have the opportunity to do that with Elevation. So.
What's the last one? Tell me about jumbo loans.
Jumbo loans. So yeah, we never did mention this. On the conventional, they did raise those conventional loan rates to 647, 200. Sorry.
That's the most that you can borrow with a conventional loan is
Correct.
647,
200.
200.
Yep,
Okay.
and that raised
So anything
to
over
this
that.
year.
Yeah, so anything over that is
Would
going to
be
a
considered
jumbo.
jumbo.
Loan. Okay.
Jumbo, you have to have 15% down. You're not going to get away from that. I know some places can do like an 80-10-10. Either way, you're going to be coming up with some money. Well, the jumbo financing, the rates can be not huge. Some people are totally afraid of jumbos, and there's no reason to be afraid of them. The rate might be like an eighth higher than what conventional is, but I would definitely say that can get you into buy you a lot of house.
In the door.
Yeah.
That's great. Well, thank you very much for telling us all about these different types of loans. If you're interested in contacting Peggy Kramer, please see her information below. If you are looking to buy or sell a home, my information is also below. So I will see you next week on Tuesday.